And here we go. Hey guys, welcome to Money Farming YouTube channel. And this is the part 3 of my series on becoming millionaire before age 30, trading crypto. Um, so in this video, what we're gonna do is we're gonna basically take the help of a book, Legendary Trader, and implement the concept from there. Okay, so what that book is this one, Secrets of a Pivot Boss, and it was written by Franklin Ochua. I don't know, but let's call him Uncle Frank. Yeah, understanding markets. So pass by that. What I wanna do is like I wanna focus on more on candlestick, because on the last video we actually focused on this one. So we had our trade setups on the volume. So hang on, it's running slow. I think I gotta close couple of them. Gotta close this one. Yep. Gotta close this one. Gotta close this one. Yep. This one though. Yep. All right. So, yep. All right. So let's do that. So we had this one. I cannot import. DF is not defined. Hang on. I think there's some problem there. So, yeah, this one. Okay. So let's see. All right. Now you guys can hear me, right? Okay. So what we're gonna do, we are doing here. So we build this strategy with the, pivot points. Now what I wanna do now is, so here comes the computational part of it. Okay. Now we know that on the down wave, we are going down, right? And on the up wave, the market is going up. So why not think of it as like computationally, and as we are in like up wave, we buy on the candle after, like, after we get to this after grad, we got green candle, we buy it, and then we trail the stop loss, and we make whatever profit we make. Does that make sense, guys? you know so yeah. Let's do that. And in the short side, what we're gonna do is, after this, after a green candle, after we saw red candle, we take short trade there and we basically trail it. Okay, so in this way we actually ensure that like we are getting the trades, as well as we are like trailing it. So bars high, yeah, and a close that is below prior bars low. The engulfing bar is usually 5 to 25% larger than the size of the average bar in the look back period. So what I'm gonna do, I'm gonna um, I'm gonna set the view as a single page, put it there, right? And then put it here, and then we're gonna code it. Okay, so let's go. See here, let's code it. All right. So let's first get the candlestick patterns here. So the setups, yeah. So weak reversal setup, pattern structure, and we are looking for patterns. The body is used to determine the size of the reversal wick. A wick that is between 2.3 to 3.5 times larger than the size of the body is ideal. Okay, so this wick should be 2.5 to 3.5 times larger than the body size is ideal. So for a bullish reversal wick to exist, the close of the bar should fall within the top 35% of overall range of the candle. Okay, this one, overall range of the candle, so top 35%. So that's your top 35% basically here, you know. So here it says the close, a wick that is between 2.5 to 3.5 times larger than the size of the body. So this wick is greater than, so once we measure the, so suppose the length of this is range, okay. Yeah, man, that's what we gotta do to become millionaire, man. You know, yeah, we gotta code every single day. Anyway, so this is length, right? Our range, and so we got this. So what it's saying is 2.5 to 3.5 times larger. So this length no should be greater than what we have. This, suppose we call it small l. So this capital L should be greater than equals to 2.5 times of L or 3.5 times of L. So that's our like reversal candle, okay. And for a bullish reversal wick to exist, the close of the bar should fall within the top 35% of the overall range of the candle. So as I told you, this is range, okay. So top 35%, suppose we are starting it from this 0, okay, 0 here, 0 to 100, this is my range, okay, 0 to 1, sorry, and you can 0 to 100% take it. So the close should be within 35% of that. All right, so that's how you know that, okay, it's for bullish. And for a bearish reversal wick to exist, the close of the bar should fall within the bottom 35%, like this one, of the overall range of the candle. So let's code it. And what I'm gonna do, I'm gonna take the screenshot of it. Okay, first of all, we're gonna save it. I'm gonna save it in the desktop here, and yeah, we're gonna create a folder here saying strategies, okay. So this one is candle wick illustration, okay. So let's code it. How do we code it? So what I need is first the range, okay. So in order to calculate the range is like high minus low. So I got my candle range, okay. So this is my range. Now I want the top 35%. So let's focus on the bullish one here. What it says, the body is used to determine the size of the reversal wick. A wick that is between 2.5 to 3.5 times larger than the size of the body is ideal. So so let's categorize the candle classification. Okay, all right, now what I want here is so if my body, so this is candle range and this is body size, close and open. Okay, so if my candle uh, so the body is used to, so if my body size, hang on, if my candle range is greater than um, equals to 2.5 times of the body size, you know, then I have something called this, and less than between 3.5. So what I have now, candle classification is a candle of wick, reversal wick. Okay, now right now we don't know what's the reversal wick is it like bullish reversal or bearish reversal? Okay, so now we're gonna code it. And how do we code it? So for a bullish reversal wick to exist, the code of the bar, the close of the bar should fall within the top 35% of the overall range of the candle. Top 35%. Okay, the close of the bar. So how do we do this? So close should be near to high, near to high. So from high to close, we get the distance, like, that percentage, and that percentage should be within the 35% of the overall range. Okay, so we get the 35% of that range. And so let me show you what I mean. Okay. Okay. So, so here we are. Come on, this pen, man. Okay, like this. Okay, so I got this range, I got this length L. So if I divide it by half, this is my 50%, so suppose from this to this the price range is 500, suppose it's $400. Okay, now the half of it is like $200 each. Okay, now if I calculate the distance of close to high, close minus high, that should be greater than equals to this half point, which is middle point, right? So first I have to check it's greater than half, and on that half I have to get the 3.5, which is 35% of that length, right? So this is what I have to do. So I get the middle point of it, so by 2, that's candle midpoint. Okay, now, and from that now to like to high low by 2, and what I want now, I want the half of it. So now if I take the half of it from here to now, so this is your HL2. Okay, high low 2. Come on, man. This fan. Okay, anyway, so I get the half of that, that's like 25%. Okay, So let's go there and do it. So half of HL2 is high plus HL2 by 2, right? And upper half, I'm gonna say upper half, this is gonna be lower half. Now this is gonna be low plus HL2 by 2. All right, so we got that. So this is your actually 25%. Okay, so we divided half half. So in order to be 35%, no, it's like it should be above 50. And the close, so let's take the half of it and half of it, 50-50. So that's your like middle point right there, 35%. Okay, 30, it's actually 33%, but like, you know, so like DF, what we're gonna do, I'm gonna say upper half, lower half, and then I'm gonna say upper half, mid. Okay, so here I'm gonna take upper half of HL2, so this point, and then this, and then take the half of it here. Okay, so this plus HL2 by 2, and lower half mid plus, so for lower half mid, this is half, so half of this is this half. Okay, yeah, I think we made profit on dot. So check this out, guys. In dot we made 1.67% profit total. Yeah, still on the uni. Anyway, so what I was saying, this one, right? So just like take half of, you know, and this is what you have. So that's your like so 50%. So we got the 50% here. This is your like half below, so there's 75% below half. And then when you take the half of it, that's your like basically so take this 50%, that's your 33% right there. Okay, now what we're gonna do in order to categorize it, it's like for a bullish reversal week to exist, the close of the bar should fall within the top 35%. Top means like upper, high, mid. Okay, so upper, high, mid. See guys, we are like doing it in the you know, like lengthwise. So I run this. So bullish candlestick, bullish week, right? So we're gonna run this one again, and what we're gonna do here, we want the bullish reversal week to exist, the close of the bar should fall within the top 35% of overall this. So we need it in the upper, high, mid. Okay, so that's what we need there, upper, high, mid, you know. So this is the candle we have, and this pen, no, this is the candle we have. So hang on here, right? This is the candle we have. This is the midpoint. This is the midpoint, and I'm gonna close it and then open it again. So this is your midpoint, right? Now this is high, This is high, this is low, this is midpoint. So high, low, midpoint, that's midpoint, and I want it in the upper of, so if I take the half of it, that's 25%. So 25%, so that should be within this one, right? This close should be within 25% and above the mid of this. Okay, so what I mean is this close price should be greater than upper high mid, and this should be less than yeah, I mean, that's the only thing we need. So that's your bullish reversal week, and for bearish it's like lower high mid, close should be less than that one, 35%, and that's your bearish. Okay, candle range. So we got that. Candle classification, you see we got this one. Now let's plot it as like long and short trade. Okay, so candle classification, bullish reversal week, entering long trade, and that, and bearish. We got 432 trades there, and let's check it out. So let's see what we have here. So this one, yeah, I mean, open should be about 2. So like, yeah, we are making mistake here. See, we are categorizing this candle. What we want is to categorize this candle though, right? So yeah, I think what we need now is so just 50 candle. I think that would do it. Yeah, now we can see clearly what is going on here. See, so this candle should be categorized as the bullish reversal candle, you know, but somehow it got this one. So what I want open to be above the 50, you know. So I want open open to be greater than HL2, and I want here open to be less than HL2. Okay, so now when we categorize it, it's like this one. So we got only 182, and now let's see. Okay, so did we get it? No, we haven't got it. Actually, we should get this one. I think we are messing up something. I think what do I need? No. So this is how I do it. Okay. Yeah, so let's take the plot -50, copy mpf.plot df, style Yahoo, type candle, want too much size. Okay, let's not worry about that. And let's see. So we got that. Fixed size, I want 25 comma 10. So we got this. Now I want to plot the, so in on the add plot, what I want to do, I want to plot mpf.make add plot. I want to plot hl2, color gray, type I want it to be scatter, and marker is going to be this. Marker size is going to be 50. Okay, we plot that, add plot, and this is what we got, right? So see, thinking it visually, no, it makes sense. All right, so so we got this. Our close is above that one. Now I want to plot. So for the bullish, I want to plot the upper, this one, upper high mid and lower high mid. So upper high mid, this is gonna be green, and lower high mid, lower was it is lower high, lower low mid, right? I mean, come on, man. Yeah, I should execute that one though first. So lower low mid, and this is gonna be red. So check this out. See, now I'm gonna do it as bar. Okay, bar, and then you're gonna see it. Yeah, it should be bar, no? Anyway, the thing that I want to show you guys is this. So yeah, it's not working properly, to be honest. The upper high, we got it good. So I'm just gonna plot everything there. Upper high of HL2, lower low of HL2. Okay, upper high of HL2, lower low of HL2, and let's see. So what I want is this one to be 100. Okay, and this one to be 75. So we are doing the size analysis. Okay, so check this out here. So midpoint, this is 75, which is this one, upper high mid, which is not right. It should be there, right? So what did we do wrong? So upper high of HL2, that's good, and then HL2, so midpoint of basically HL2 and this one. So that's your midpoint, right? Oh yeah. So, I think I know what we did the mistake. So this is gonna be actually high, this is gonna be low. So see, this is how we basically do the analysis there. So now you can see it, right? Now it's good. See, so that's your midpoint, that's your 75%. So so if I want to categorize the candle now, so suppose this candle, right? So this is actually bullish. uh, Not quite. Hang on, let's see the bullish candle somewhere. Where are you? Yeah, not this one too. What I want to do though first is take the middle. So his body is used to determine this, a wick that is between this and this times larger than the size of the body. And for a bullish reversal wick to exist, the close of the bar should fall within the top 35% of the overall range. Okay, so here, if I do this, check this out. So this is my, so this is actually my, so if I take this range, you know, if I take this range L, this is my 50%, okay? So, and this is, and this is my 25%. This is my 75%. So 33% should be between this and this. So that's your, so half of 25 and 70, say 75 by 2 is like, it's 33, right? So 3, 6, and here is like, 7, 35 is close to that one. So once we have this point here, we want that to be close to be above that one, okay? So I want this one and this one, so HL2 and mid of HL2 and high. So that's my midpoint of 37%, okay? So I'm just gonna go ahead and do that. So what was it? Upper high of HL2, so high plus HL2. So yeah, it's not making sense here. Anyway, yeah, I'm gonna do it here. This pen, man, I'm really literally so what? It's working like this. So this is midpoint, HL2. So half of that is gonna be 25%. So that's my, so high, right? So high plus that by 2, that's my 20, that's my 25%. So this plus HL2 again, that's my midpoint of that one, okay? So 35% bullish. Yeah, why not? Yeah, because we are classifying it as like bullish reversal and bearish reversal so that we can take a trade, with less stop loss, to do it as like computationally, to make more profit basically. So upper high of HL2 plus HL2 by 2, bearish 35%, or upper lower, yeah, likely reversal trend, exactly, yeah. So lower low of HL2 plus HL2 by 2, okay? So that's my lower 35%, So I'm gonna plot it here. So upper 35% and lower 35%, and then this is gonna be 150, and let's check it out. Whoa, what happened there? I don't understand what happened right there. Ah, sorry. How long have you deployed your strategy? How long it has been since you deployed your strategy? So that's my 35%. So if the candle comes around that, so see this one, that's your like short basically. So this one, see, check this out, right? This candle actually qualifies as to be a short reversal. See this one and this one. Okay, so that's your bearish and that's more bearish. So this is more bearish, okay, because this close is below this one. Well, this is open, but the close is around here, so it's below that one already. So so basically what it's saying, like open and close should both be below that one. Most victory strategies are long at reversal trend, like buy below BB or EMA. Yeah, could this PDF be shared? Yeah, man, why not? um Hang on. I'm gonna share it on Discord, okay? Yeah, just shared it. Yeah, so let's do that. Okay, let's do it. What I want body to be this, okay, and so candle range should be greater than 2.5% of the body size, right? And my close and open should be greater than so this one, upper 35%, right? Yeah, yeah, upper 35%, both should be greater than that, and here both should be less than lower 35%. And here we go. So let's check it out, guys. So I'm gonna plot it here and we're gonna see some trade setups. I don't like this kind of strategies. Yeah, I know, but man, it's like, this guy actually who wrote the book, like he done a lot of research too. Okay, so it's like, to his credit, like what we are doing, just we're coding what he discovered. So so we are technically not building a strategy, we are just like building uh, this classification. Okay, so technically we are not building a strategy, to be honest. What about here? So yeah, maybe 100, I don't know, 200. It should classify this one, right? No. What about 300? Still not. Only this one. This candle too. So I think I'm messing up something. Hang on, let's disable this. And let's just do that. Let's see, okay. We got that. So here, let's take the 50. And let's analyze it. So, yep, this one is doing good then, right? See? So, we just need the body size to be greater than 25%, 2.5%. And oh yeah, oh okay. Did it say like 2.5%? Times larger. What is ideal? A wick that is between. Oh, okay. A wick that is between 2.5 to 3.5 times larger than the size of the body is ideal. Ah, man. Yeah. So here comes the trick. All right. So, you guys ready for this? So, wick. Okay. So, suppose. Okay, let's do it here. Okay. So, there will be two kind of candle on this one. So, this is my close, open, high, low. So in order to calculate wick for this one, no, it's like we have bullish wick, so close minus low. This one is close, open, low, high. So low, open minus low, and close minus low, that's your like lower wick. Okay, and this one is so open, close, low, high, close, open, low, high. So in this one, high minus sorry, this is close, this is open. So open minus high and close minus low, that's your like all right. So let me calculate that. So lower wick size, that is your so if np dot where if candle is greater than if close is greater than open, then what we do is like we take open minus low. Okay, so open minus low. Otherwise, what we do, we take close minus low. Okay, so upper wick size, np dot where if close is greater than open, then what we do, we take high minus close, and here we take high minus open. So that's our percentage. And here what we want to do, wick, right? So we want upper wick, so lower wick size should be greater than, okay, I think I already have it here. So lower wick size, that should be greater than, larger than, right? this. So if it is larger than that, the body is used to determine the size of the reversal wick. A wick that is between 2.5 to 3.5 times larger than the size of the body is ideal. So lower wick size should be greater than equals to this, and it should also be greater than equals to 3.5, or it's just like if it passes this condition, then we don't even need this condition, you know. Let's take it here, and we take upper wick size. Guys, why I'm doing this now? For leverage trading, we need actually like less stop loss, okay, very small stop loss. So this actually shows that, you know, this actually gives us that. So holy moly, what? Okay, so see, yeah, okay, now we are categorizing it correctly now. Okay, reversal candle. Now let's move on to the book and says, so pattern psychology is that like shows several types of bullish and bearish reversal wick candlesticks that can all signal profitable reversal opportunities in the market, especially if these patterns are paired with key pivot points. Okay, so in traditional candlestick jargon, these particular candlesticks would have names ranging from hammer, hanging man, inverted hammer, shooting star, gravestone doji, or dragonfly doji, and whatnot, depending on where the candle is placed in a trend. Now you can see why I simply call this candlestick wicks or even tails instead of fumbling over the proper naming of this candlestick. I believe it is more important to know what these patterns represent and what are they telling you. So when the market has been trending lower, then suddenly when the market is been trending lower, then suddenly forms a reversal weak candlestick, the likelihood of a reversal increases since buyers have finally begun to overwhelm the sellers, right? So selling pressure rules the decline. Okay, but responsive buyers enter the market due to perceived undervaluation, and for the reversal wick to open near the high of the candle, sell off sharply intrabar and then rally back toward the open of the candle is bullish, as it signifies that the bears no longer have control since they were not able to extend the decline of the candle or the trend. Instead, the bulls were able to rally price from the lows of the candle and close the bar near the top of its range, which is bullish at least for one bar, which hadn't been the case during the bearish trend, right? So this is actually our the stages of reversal week, you know, stage 1, stage 2, stage 3. So week reversal example, we can see these trade examples here. See these big candles over there. Yeah, so what we can do here is we can lay it down here, but I wanna do it on the low, high, and then show you here. So see, this is what we are talking about, right? Now you can see, now if we add some chart and pattern to it, then we can understand like what the heck is going on there. Okay, so see this one, I'm gonna zoom in. This is on 1 hour time frame though. Okay, now see, as we are down here, okay, we should long. As we are up there, we should short, you know. Now the thing that I would like to do is like, as we are in uptrend, you know, up wave, we should long the market. As we are in down wave, we should short the market. So let's see. Okay, that the thing that I want to show you is this. wave direction is up 1 and wave direction is -1. So now we reduce it to 311, and then you're gonna see a good trade setup here. See, check this out, right? So now we can actually reduce the risk quite a lot, isn't it? So I'm gonna plot it there and show it to you guys too, what I mean by this. Okay, so okay, let's do this. 1 hour Bitcoin. So see here, long short, long short. So now we are actually saving the see here, right? What we can do here, we entered long there, and now we just like trail it, you know. um, Now we just trail the yeah, we're gonna add it later on. We're just gonna trail the profit there, you know, this here, and here our it will be closed. So we made this kind of profit for this one. This is gonna be our stop loss right there. We entered there, so let it run, you know. So here, so what we're gonna do, we're only gonna, as we are in up wave, no, we're only gonna put the stop loss from the green candle. Okay, so trailing stop loss, this is how we're gonna do this, and here we exit the trade. Okay, we again enter here. Well, here we don't have stop loss there, so you know, it will hit our stop loss there. Here we have a stop loss there, this, and then stop loss change to this point, stop loss change to this point, or stop loss change to this here, again stop loss change to this, and then we exited the trade around there. Or not exactly, I think. Yeah, we didn't. Okay, so we changed here, and then we here, and then exited there, right? So it's basically your you know, break even, right? So we need more context for this actually, and that's why, you know, let's go later down the book. So extreme reversal setup, pattern structure, extreme reversal setup, where it says the first bar of the pattern is about 2 times larger than the average size of the candles in the look back period. Okay, and the body of the first bar of the pattern should encompass more than 50% of the bar's total range. What? Yeah, but usually not more than 85%. Yeah, okay. All right, guys, I think we're gonna do our own. Okay. Yeah, so let's actually add the pivot points, daily candlestick, and then we analyze it. So what I mean this one. Okay, so we're gonna add these pivot points. You know, that was the main reason doing this, reading this book actually. So here, no, this is your pivot points, which is like daily pivot points, and then we have previous day high, previous day low. So that actually gives us support and resistance. So we're gonna use that candlestick to take trades from there, and we're gonna also use it to take trades. So see, you see this, right? This one, check this out. See this one, this is low of the 4-hour candle. So once we have that formation on there, so once you combine this, so 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16, combine this, that's your like 4-hour candle. So in 1 hour we have 4 15 minutes candle, so here like 4 hour, so that's your like 4-hour candle. So let's do it. Okay, Now we are adding. The second is red hammer. Yeah, I don't know. Red hammer. Yeah. Let's go ahead and do that. Okay. So for that, I think we developed some strategies, right? Binance futures. Where we are here, right? Strategies. So where do we want to go? Is here. PWD. This one. I actually want this user data. Data. Binance. This, right? So the data, and we got that. So we got that. We need 1 hour. So we are doing this on 15 minutes. We need 1 hour, 4 hour, 1 day time frame. Okay. So this is now things getting interesting, guys. Okay. Week 10 003. I want the data from 2023 till now for Bitcoin. Okay. So I want it for 15 minutes, 1 hour, 4 hour, 1 day. Okay, 4 time frame. We want it, and let's do this. Wait, what was that? So 1 hour, 4 hour, 1 day, 8 hour. What if I want it from 2022? No, this is not right. Okay. What? Okay. Let's get it only for 15 minutes. What is going on here? So DF. Okay. Yeah, we have the data from 29. Okay. Sorry, guys. We already have the data. So we got that. Let's get the last 10,000. We get this VWAP there. And guys, please let me know if you want to code me one strategy from YouTube. So we're going to code it. One strategy from YouTube. Like, just keep it though, like 15 minutes something video, from your liking, I suppose. So we got that. Yep, here we are. So I want to, I don't want this right now. So I want this, and I want the 4 hour. high and low. So do we have the 4-hour previous candle high 4-hour? No. Get 4-hour pivot levels, DF 4-hour. So we got that. So now we have previous candle close 4-hour, this, right? So what I want the fill between, but first I want to plot the high and low of the 4-hour. Previous candle high 4-hour, previous candle low 4-hour, and you know what, let's keep high and low this, but instead of that I'm gonna keep it like this. Sorry. Yep. And we're gonna fill it in between. So I think we added here those analysis, I suppose. Fill between, where is my fill between? Anyway, I'll find it here. So okay, so here's our fill between. Here we want to fill between previous candle close 4-hour and previous candle low open 4-hour, and we want it as this color. Okay, and alpha is 0.5, so keep the alpha 0.5. And what we want to do is, like, if previous candle 4-hour is greater than previous candle open 4-hour, you know, this one, and we want this one when it is less than this, I want the resistance color, and then fill between, and here we go. Panel is just the 0, man. Okay, so see, we got this one instead of this. Let's do 0.2. So yeah, so this is our 4-hour candle. Now I want to build a strategy. So check this out. Okay, you see this one? See this one, right? So that's actually, I want to, like, when we have this supply shoot, no, like, I want to take short trade there on the 4-hour high. So we are already, like, previous 4-hour candle was like low, right? So, you know, this one may make sense to take short trade there. So let's see. And same goes here, see. So I don't know, man. Yeah, I actually wanted to code this one though. Hang on, I'll show you. So this one. So this one, you see, you know, this actually gives us bias. Okay, and you want to know what bias we are talking about is we're talking about this bias, this one, higher value bullish, narrow CPR expansion. So we already knew that this day is gonna be breakout day. Okay, we already knew this day is gonna be sideways day. Okay, this day already gonna be sideways day, and this day is gonna be also sideways day. A bit like, but it was some like expansion and then came up, and then like, it was bit trending, and so we want to code that. And how do we do that? Is daily pivot. Okay, now what do you guys think, man? What do you guys want to do? No, because I wanted to build a strategy, but I don't know, man. It's like 4 hour came up there, 4 hour was there, so we are already on the long territory. That's why, without Wyckoff chart, I can't read the chart now, to be honest. No. So I think we should extend on our previous strategy. It was working good. So let's extend on that. What did we work on? Was this one, right? This. So once you go and look for the David Weiss video, no? David Weiss support and resistance. He have this channel, this video where he talks about this. Okay, now so we did look at the, what was it? Yeah, so we did look at the volume, right? So let's look at the volume here. So what I want to show now is that, like, if, see, okay, let me get the volume, and 10, 100 perhaps, and show the pivot markers. Okay, so see, we had the divergence one here. Now let's talk about the supply and demand one. Okay, supply and demand meaning if the volume is, if the current wave volume is 2 times less than the previous down wave volume, then we take the trade. Basically what I mean now, see here. So this actually works on effort versus result, meaning see 204 155. So volume is, this is the leading indicator. Okay, so that's why when I think on like candlestick, no, like it's too much to think about. And when we think about just that turning point, it becomes easy. Okay, so what I want to do is as we have this swing high, there the volume is greater than previous volume, but it closes within that one. So if it is more volume than this one, you know, then it should make, it is making higher high, but it's closing below that one. So that's our second strategy. So let's add on that one here. So I'm gonna just wave volume trading. And here, so if my current wave volume is greater than previous wave volume on the down wave, and the candle swing candle close is greater than D2 swing low, okay, then it's basically wave direction change to down wave. Then it's basically there is more effort but less result or less reward. Okay, same goes here. The upwave volume, first upwave volume is greater than second upwave volume, but what is happening here, that swing candle close is less than U2 swing high. There is more effort on upwave but less reward. Okay, it closes. So we got only two. I wonder why. D1 wave volume is greater than D2 wave volume. Swing candle close is greater than D2 swing low. Yeah, this should work. Yeah, I mean, when this is like more effort, less result. Enter long on down wave. This is more effort and less result. Enter short on up wave. So we got these trade setups here. I'm gonna change it to wave volume trading. So this one, okay. So we got this much of trade setup. So let's go ahead and chart it. So see, we got these trade setups here. So here, see this more volume on the up wave, but as it closes here, we got that down there, this one. Now what we want to do on this one now is like see, this one got captured, okay, but what I want to see is that so this is my up wave 1, this is my up wave 2, so this should be greater than my down wave 2, you know, down wave 1, down wave 2, so down wave 2, that should be greater than down wave 2. Like this one, see, 48, 47. So you know, we're gonna take care of that. Okay. So here, swing candle close should be greater than D2. So it is greater than D2 swing low, but it should be less than U2 swing high. Okay. It's greater than D2 swing low. So here I want to get rid of this trade setup, right? Why? Because see, this one is so U1 D1 U2 D2, so it should be greater than D2, right? Should be greater than D2. This one, okay. All right, so we reduce that, so to 93. Then all right, so we reduce that. Yep, now it's good, I think, right? Yeah, now we can work with this one. So let's go ahead and add that strategy to our previous strategy. Okay, so I want this in the strategy here. Instead of divergence, I just want this one. And then for the trade setup, this is my trade setup. No, what I want to do different here now is to show you one enter tag. Okay, now we got this one, this one, hang on. All right, let's do it later on. Okay, let's first test it like this. Okay, and then so more effort, less result. And then what else is left is the supply versus demand. Okay, so supply versus demand is so where is that chart? Yeah, this one. So supply versus demand. No, this is your supply versus demand. So see, so here we push there, and as we come back on this down wave, this one was less than this one. So you know, this wave volume was less than this one, and it made like higher high, you know, higher high and higher low. So that's basically my supply versus demand. So here demand is more than supply. So that's your another trade setup, right? So how do we look at it? This is how we look at it. So show you what do I mean by that. Yeah, this one. See, we made higher high, we made higher low, but the volume is less on this one. So on down wave, no, the volume is less, so meaning supply is less, meaning the demand is still in control. Okay, so that's what we're gonna do here. Okay, So the condition, so let's first test it. Okay, let's first run the back test on Bitcoin. 24 is 41. Swing candle close. Yeah, just do the close, man. Doesn't matter. So yeah, see, we made more profit than previous. Yeah, on the previous one we made around 65% profit. Now it made around 97% profit with 5x leverage. The win rate is reduced to 75%, but you can see that now let's I think I'm gonna do the trade entry. Which trade entry was the, you know, was responsible for that? So to do that, um yeah, yeah, so to do that, what we need is, we need this, hang on. um this, this, so here I'm gonna do this, enter tag 1, and this enter tag is gonna be this one. Gonna take this one and gonna remove that one. Enter tag is gonna be this one. Okay, so here bullish divergence, then the same thing here. What's the tag, this meaning? Yeah, we just coded it. Yeah, we just coded it. Tag means like, haven't you used tag? It's actually, it's yeah, you're gonna see it. So we're gonna see how much the distribution was for each trade entry. Right now we can tell, okay, how much long and like short we put there, right? So here is like tag, see, tag is like other, it can tell which one was which. Okay, so yeah, the down wave, no, we just coded it here, this one. So this we just coded it. Okay, so you can look at the logic, like how we did it. Yeah, I have to change it as well. So df.lock entering long trade is 1. Then I'm gonna change entering long trade, this, entering short trade, entering short trade. So yeah, we're gonna see it now. Okay, what the heck, where's my tag, man? I don't understand. Where's my tag? I don't get it. Do you guys know what happened there? It should come here, like, what tag we used to enter the trade. Is it the spelling is correct, right? Enter tag. Yeah. Hang on, I'm gonna look at the documentation. Buy tag, enter tag. Um. Okay, so see, enter long, enter tag this. So this is what I did, right? Populate entry trend, populate exit trend. Okay. So does it reset? Okay, I got it. I got it. I got it. So I just do this. I don't know if it will work or not, but I think it will work for sure. It's just I'm trying out different hack, guys. I don't know. It used to work. Yep. See. So bullish wave divergence trade. Um. So it made the most profit. More effort, less result. Enter short on up wave. It made the second most profit. With one trade being win, one trade being lose. And bearish wave volume divergence made one trade, which was winning trade. Yeah. Hmm. So let's extend this trade. So what do you guys want to do? Do you guys want to test it for the whole this thing? Let's test it for the whole month, year of the start of the year, and let's see how it works. Okay. Yeah, do we have the data though? Yeah, it still made 69% profit. Our drawdown was more. Win rate was decreased there. Sharp was good profit factor. So bearish wave volume divergence was fucked it up, I think. This is the most losing trade on this one. Where's my down wave? More effort, less result on down wave. Where is that? Bearish divergence and then more effort, less result. Enter long on down wave. More effort and less result. And that's why. So this one, this one, this one, this one. All right, let's check it out. Okay, it's more drawdown now. 60% drawdown. Man, it's like 5x leverage is like not working out. So bullish, bearish wave divergence, these were the most. So I think we shouldn't use this one, I guess. Just like take the divergence, man. You know? Okay. Yeah, 60% win rate over all those time. The bearish divergence was losing trade. How about if I change the leverage to 3, perhaps? I don't know. Yeah, I think what we need to do on this one, I think I got it. So this one now, we can keep it. We just need to add some confluence. V min line is greater than V min line dot shift 1. And this one, V min line is less than V min line dot shift 1. And let's see. Okay, so we did reduce the drawdown. Yeah, and we did made some more profit. Also increase the win rate, and see, now it's making profit. This one. And bearish, like, you know, from that perspective, yeah, bearish was there was not bear market, so you know it makes sense that it's going down. And what time frame we are testing on is hour, I think. Yes, hourly time frame. Yeah, so drawdown of 22% is, you know, yeah, it's manageable. So this was our first target, the most target that got hit. This much profit. Swing low, trailing stop loss, force exit, long profit target, this, long stop loss and short stop loss. Yep. Yeah, so let's plot it and see. Okay, so we plot it. We come here 1 hour, right? So this is the plot. So see, come on, man. It's like we don't even have a data for it, I think. So March, April, May, June, July. It's just the April chart. That's why I was like wondering what the heck is going on. I gotta download the data more. Twenty 1101 pairs Bitcoin USDT. Yeah, we have the data. Ah, 1. Yep. So here we got the trades. So this was, so this trade, short trade we entered, it got losing trade. Okay. Long trade we entered here. First hit our target and then second target was hit. You know, and then we trailing stop loss at 1. So yeah. Yeah guys, I think I'm gonna stop the stream here. And I think next what I'm gonna do now is like build the DCA bot, just like simply build it from scratch. So what we did on Bitscape now, you guys know about Bitscape, right? Here, so we're gonna build this DCA bot from scratch on this one. Okay, so if I start some combo futures bot, so this, suppose we entered long here, you know, so as it is going up it's gonna sell some, as it coming down it's gonna add more onto that position, then just gonna do. Okay, so the simple strategy that we're gonna do is this one. Okay, on 15 minutes, now let's take on 1 hour chart. As it's like turning red, we're gonna sell it and then we're just gonna let it, you know, trade, and somewhere around here we're gonna exit our trade. Okay, as it's going up we're gonna enter the trade. So just imagine couple of order there, you know, there, 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 and as it is going up it's gonna shift, the order on the downside is gonna move up also. Okay, so yeah, this is our DCA bot, and yep, and we're gonna keep the distance between two lines as 1% only. So let's see how it goes. Think I'll probably do it today only, I don't know. But I tried doing it, but keeping all this record in dictionary is too much, man. You know, so yeah, we're gonna see it so later on, and thank you guys for watching, you know. Hope you guys liked it. Please like, subscribe, and this is my journey, and I thank you guys for being part of it. So I'll see you guys in the next video. Thank you. So where's my stream here? All right, guys. Ciao.